Hey everyone, welcome back. Let's get started, shall we? If you're new to the stream, welcome. Let me explain to you how this works. So first thing I'm going to do is we're going to talk about the economic calendar very quickly. There's not a whole lot to talk about. Then we're going to get into the charts. So if you have a chart that you'd like to see, put it in the chat now. So by the time I start looking at the charts, I can go back to the chat and I can take a look at your chart. It doesn't matter if it's a stock, a coin, whatever. Share it, please. I'll be happy to look at it. And then we'll take a look and see if there's any Trade Scanner Pro trades that are in progress. I'll probably mix that into the chart analysis anyway. All right, so with that, let's get started. I see here we got Kai. Hey, Kai, good to see you. What's Kai saying? All right, good, cool. Yeah, exciting times, right? Interesting times. Yeah, I mean, exciting times, especially for the fourth week of August, which, as you guys know, I talk about that a lot, right? The third and fourth week of August, these are the worst weeks to day trade typically because of the lower volume. So with that, let's get into the economic calendar real quick. So this week, again, week 4, we had the Jackson Hole Symposium, Wednesday, Thursday, and Friday of the previous week, right? And Powell had some interesting comments on Friday, and you saw what happened with the market, right? So now today, and since then, right, Bitcoin has turned. Bitcoin's looking strange, right? So we're going to talk about that. I wrote my analysis yesterday on TradingView, and I basically just talked about this lower high that was established. But again, I'm sure there are a lot of people out there that are getting very bearish on this. And this is not exactly bigger picture bearish yet. It may be getting there, but we're still inside the range, right? So I'm going to highlight that even further today. All right, so as far as economic calendar goes, let's get into that. I guess gold for me. Oh, okay. Yeah, absolutely. We'll take a look. Hey, Hussein, good to see you. All right, my regulars, my 3 of the 5 people who usually watch me. All right, I appreciate you guys, man. Anyway, if it wasn't for you guys, I wouldn't do this at all. So anyway, economic calendar, right? So this week we have, what was it? On Wednesday, I believe it is. I think it was Wednesday. We have GDP annualized, and that's not a big deal usually. I think it's Wednesday. The market doesn't react to that because that's old news, right? That's a backward-looking piece of information. So I wouldn't worry too much about that. On Thursday, I believe it was Thursday, we have core PCE. I believe that was Thursday. I don't think that was Friday, or maybe it was Friday. You want to double check with me on that? Double check. Hey, John. All right, cool. Yeah, we'll take a look at those. All right, thanks for joining. You guys might want to double check. We have core PCE, which is core price expenditures, core price consumer price PCE, core PCE. Yeah, core consumer price expenditures, right? This is an important number because Powell specifically talked about looking at this number numerous times, right? That's why the market makes a big deal out of this number. So I believe that was on Thursday or Friday. Double check that. And I believe that's an 8:30 a.m. number. Double check the timestamp also. But core PCE is a market mover. It's become important because the Fed specifically mentions it, that's one of the criteria that they look at, right? So that's a market mover. Keep an eye on that. I mean, but that's it for the week. I saw Germany had their CPI report. I think that was Wednesday or Thursday. That can affect the euro since Germany is a pretty heavy part of the euro. But other than that, I wouldn't really worry too much about that because, again, it's not dollar, right? Dollar is what really moves the global markets. So that's it. There's really nothing else. So it's the 4th week of August. And like I said, everyone is away this week. So volume is going to be the absolute worst. This is the cyclical bottom of the year in terms of volume, right? Weeks 3 and 4 of August. Now, from this point, volume starts to gradually increase and gets back to normal, in my opinion, around November. Okay? So it doesn't mean we have no volume. It's just historically for the year, this is usually much lower. So movement is going to be much more muted, right? It's going to be follow through is going to be harder to achieve. Momentum strategies are going to suffer more. It's going to be harder to trade those, like my Trade Scanner Pro, which is based on a momentum strategy. So you have to know how to adjust. If you don't know how to adjust, then just don't trade or paper trade. There's nothing wrong with taking a couple of weeks off when they're not very good weeks in terms of volume, right? That's part of being a trader, is having a good grasp of when the environment is more favorable and when it's not. And one component that you can look at that to make that judgment is volume, right? General volume. Okay, so compare volume from April to volume now, and you should see a dramatic change, right? So, because we're now at the bottom of the slower part of the year. The regular part, or the higher volume part of the year, is November until May. That's the cycle. That's nothing new. All right. So anyway, enough about that. Let's get into the charts. All right. And guys, if you have any questions about anything, just let me know. So Bitcoin turned, right? And I drew this rectangle on the chart here. This rectangle that you see, this corresponds with this consolidation that you see right here, okay? Consolidations, when you see, that's a clear-cut consolidation. When you see that, usually the midpoint of the consolidation can act as a support or resistance. This concept is even clearer if you use market profile or volume profile, because what happens is the market spends most of its time around this particular price, and that becomes what's called your point of control. And when you have something like that, that can act actually as a pretty significant support or resistance. You don't need to be a market profile expert to know that. All you have to do is spot these obvious consolidations and keep the midpoint of that consolidation in mind. Hey, UTXO, you can't see the chart. Huh, even though he's a bot. Yeah, I mean, can anyone else not see it? I think Kai would have said something. Maybe you need to refresh the browser. We can't see it? None of you guys can see it? No screen? Oh man. It says that I'm sharing the screen. Maybe refresh the browser? How about refresh the browser before I refresh mine? Can't see it either? Kai can't see it? How about refresh the browser? Anyone refresh the browser? This stupid thing. Glad you guys are telling me. Can someone let me know if you refresh the browser if that works? If it doesn't work, I'll have to refresh this. I thought you had a nice intro screen. Intro screen? Nothing. Okay. All right, hold on. This thing, man. What the? I don't like when these things give me technical problems. Hold on a second. All right. Hold on. I'm gonna reset this. Thanks for letting me know, you guys. Stupid thing. All right. I'm gonna try resharing it now. Let me know if you. All right, I'm resharing the screen. You're like when I say, Alex from Romania. Can you see my screen now? Alex from Romania. I can see the chart. Okay, cool. All right, good. Sorry about that, guys. Guys, thanks for letting me know. I was talking in front of a blank screen the whole time. It's ridiculous. All right, cool. All right, so let me back up again. All right, so back to the Bitcoin chart. Here's my Bitcoin chart that you guys now can see it. Thanks for the feedback, guys. See, without you guys, I wouldn't have known. Without you guys, I would have been talking in front of this blank screen for the entire video. Okay, cool. All right, so again, like I was saying, right? In my trading view analysis, I pointed out this lower high, and I was just talking about that whole market profile spiel. I was talking about this section right here. Okay? So when you see consolidations like this, the midpoint is typically a support or a resistance, right? That's why I highlighted generally this area. And as you can see, it's not like precise, right? Like it broke through it here, but then when it broke back below it, look, now it's respecting it. That's the market, man. That's random like that. Okay. But the thing is, it's respecting it now. So that's all that matters, right? So that's why that's an important level. How much, okay, so how much chance for Bitcoin to recover this support? All right. I can't give you an exact probability for that, but we'll talk about that. So here's the thing. We've pulled back into this 113K area support, right? But there's a few ways to look at this, and it's really going to depend on, are you looking at this as a day trader or as a swing trader or whatever. As a swing trader, this entire section right here, in my opinion, is still wave 4 because we haven't gone over this overlap, right? We're trying to touch it. Notice, you see that? How it's coming close. What's Alex saying here? Way too many bearish people around. Way too many. Right. People are going to react that way. Okay. Whenever you get these big bearish candles, people wear their Captain Obvious hat and they don't pay attention to the big picture. Also, you have to understand a lot of people use like things like the RSI and all other nonsense. And they're like, hey, it's bearish. So they all follow each other. That's the herd mentality. Now, we haven't overlapped over 108. We haven't done it yet. That's the wave 4, wave 1 overlap on this what do you call it? On this impulse. So that's why the wave counts are so important in these situations. You got to pay attention to these wave counts, right? Now, so yeah, I'll take a quick look at the weekly, but you have to pay attention to this consolidation and the wave counts. This is still a wave 4 until we overlap. If we don't overlap, then a lot of people are going to get caught short, right? Now, there's a lot, the fundamentals have not really changed. Now, look, I'm all for bearish whatever, okay? I have an open mind, but until I see clear evidence, right? We have a lot of areas setting up for longs. We have a failed low situation, double bottom, triple bottom area on a possible wave 4 low, right? This is all lining up for a long, right? In that regard. Now, 113, the 113 area still holds. I mean, we went to 110, but as you can see, we got some tails developing there, right? So it's trying to hold. So to answer your question, like what are the chances it's going to bounce? I can't really give you a probability. What you have to wait for is the confirmation. We don't have it yet. So what you want to see is you want to see a green candle break the high of today's candle, at least. To the high of today's candle is 113,645. So you want to see a pin bar, you want to see an inside bar, and you want to see the high of that candle be broken. That will tell you at that point that there's a greater probability that we're going to go and retest the midpoint of the range, okay? The midpoint of the range is here. So if it bounces again, right, you're going to see all the Michael Saylor videos come out, right, it's going to 300 million thousand again, right? No, I would not be that optimistic. If you do get the swing trade bounce, the confirmation that I'm describing here, I would be eyeing this area, the 117.5, okay? That's the midpoint. Hey, Ricky, from London, from UK, from England. Dear. Hello, Ricky. Why is it ugly? I only see higher high, higher lows. Right, well, because you know what, Alex, people are looking at this. They're focused in on this, right? And you have to look beyond that. This is why wave counts are so important. People don't pay attention to wave counts. And when wave counts change, that's when you're usually getting some kind of information, right? So as you know, Alex, we always talk about this all the time. I've been calling this the wave 5, right? The wave 5 of the 5. In fact, I have the 5s up here. We never got to 130. I was anticipating a test of that. We never got it, okay? We failed. Now, and this is a failed high. So this is tricky because while this could be the wave 5 that I've been describing, the 5 of the 5, and this movement that we're in right now could be the part of the broader wave 2. What doesn't match with that is the catalyst, right? We don't really have a catalyst. Okay. Oh, I'm going to take a look at the weekly, Alex. So the wave 5 scenario that I've been describing, while this could be the 5, and there are 5 waves inside of the structure here. So there are 5 waves complete, which means the broad super cycle, whatever you want to call it, wave count of Bitcoin may be complete. But the thing is, this movement that we're getting here is just not convincing enough for me yet, as far as we're in the broader wave 2. I'm just not convinced yet, right? Because again, we haven't broken 108. Supports are still generally hold. So I'm suspect of this being the wave 5 completion. And this could be just the wave 4. You know, I'm always wrong about those wave 4, wave 5s. A lot of times I'm wrong about the magnitude. So this could be wave 4. If it is, then we have one more leg higher. Okay. If this support holds, then we have one more leg higher. Now, the key to something like this, it's not just charts. There has to be a catalyst to really get this thing going one way or the other. So far, all I see are signs of bullish catalysts, right? We have a Fed that pretty much seems to be bent on cutting in the next meeting, right? Like it's like a very, very high chance that they're going to cut. So that's priced in. That's a positive, right? We also have quantitative easing talk, blah, 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 right? Because of a weakening labor market, blah, blah, blah. If we go into that easy monetary policy situation, that's only going to be positive for this. I don't see how that's going to be a negative catalyst, right? Now, also the thing with Bitcoin you have to realize is Bitcoin is not I don't consider this really an inflation hedge, a straight inflation hedge like gold, right? I don't. I consider this more of a tech play because it's just dependent on the Nasdaq, in my opinion. Now, if you look at the Nasdaq as an inflation hedge, then okay, right? But it's a tech play, right? Especially now with all the institutions that are heavily involved in this thing, it's tech. So if the Nasdaq pulls back, then this thing will probably feel it, right? Unless something changes. That's just an opinion. But the thing is, so this is the weekly time frame, right? And maybe this is why people are bearish, right? But Alex, like you're saying, right, there's nothing but higher lows, right? So this is the broader wave 4, and this little section over here could be the wave, the pullback that we're looking at right now could be the wave 4 of that section. It hasn't overlapped. That's a key point. Now, if it breaks 108 this week and closes below 108, then the wave 4 scenario is no longer in play. That's how you have to use this information. Like, I know people want forecasts and they want me to say, whoa, Bitcoin is going to 300 million K by tomorrow. I know that's what the amateur wants, but that is not how this works. You have to basically look at historical data, which is what the market gives us on a chart, and then based on that information, assess what is likely, right? We assess a few scenarios and we try to isolate one that is more likely. And then we must wait for the market to confirm or agree. If the market does not confirm, then that scenario that we were thinking of is no longer in play. That's how this works. If you can't adjust to that, you're a gambler. Get off my stream. I don't even want you here. Okay? Because there's plenty of monkeys out there for you to watch that'll tell you what you want to hear. I'm not one of them. So that's how this works. There is no confirmation yet of the bounce, but we also haven't broken the 108K, which is the overlap, right? The wave 1 overlap. When we get if we get the wave 1 overlap, then I will believe that this impulse is no longer in play. And I will believe at that point that wave 5 is in. And at that point, I will believe that we're in maybe the beginning part of a broader wave 2, right? Where the market's vulnerable for a more pronounced retrace, but we don't have the catalysts yet. So it's a matter of catalyst. You know, and a catalyst can come out of nowhere. It could just be some piece of information that just no one was expecting. And next thing you know, Bitcoin is back to 80K, right? And by the way, the broader wave 2, the ideal areas for broader wave 2, especially for investing, I'm looking at the 75 to 80K area, right? That would be about a 382 pullback, which is typical of a wave 2, right? So a broader wave 2, that's what I'd be anticipating. And that type of move can take months to play out. if not longer. Remember, wave twos are typically consolidations, right? There's bearish movements, they're counter trend movements to the broader trend, but they're typically consolidations, right? So this could be like the beginning of it. But again, so the confirmation or a further confirmation would be we break 108. If we break 108, I'm looking at 100K. If we break 100K, we're looking at 95, right? Now, each one of those supports, like 105, 100, there are likely to be swing trade bounces in those areas. Even in the face of a bearish environment, you can still get swing trade bounces. If anything, I would not short those supports, okay? If you're going to short, you have to find resistance levels. And in my opinion, it's best to look on smaller time frames, right? So that's really the outlook. So right now, we really haven't turned bearish yet. Now, on the bigger picture, if you're working on small time frames, if you're working on intraday time frames, then yes, there's plenty of bearish things to do. Plenty. Okay, we have a lower high right here, right? And we this thing is basically pushed into a lower low area. So I mean, you can make arguments for shorts on 30-minute, 15-minute, 5-minute time frames all day long. 1-minute time frames, sure. Okay. But the bigger picture, I would not take a swing trade short expecting this thing to go back to 95K. That, I mean, it's aggressive. And if you do it, you're asking for trouble, in my opinion. Now, I know Hussein, you were short something. What were you short? Was it Litecoin again? Or I think you were short something. How you doing? I like to hear the outcome of your positions. I mean, because Bitcoin is certainly behaving in your favor. All right. So you guys have any questions about that? About the Bitcoin outlook? So, I mean, does it make sense? Yeah, sure, Ricky, I'll take a look at oil. Does it make sense? You have any questions about that? So, while it's ugly, pay attention to your location and pay attention to the broad structure. This is an ideal spot for a swing trade long. Okay, ideal. It just needs to give you the confirmation, right? And like, look, the Trade Scanner Pro, you could use something like this, right? Turn the Trade Scanner Pro on. And you could use something like this, right? And I mean, look, it actually called a long over here. Obviously, it must have gotten stopped out. Called a long there. But usually, if this is a failed low situation, it's likely going to call a long again, right? I mean, look at the heads up back here. This is a daily time frame. Imagine if I go to the 4-hour time frame, right? I mean, see the 4-hour right now. Okay, so this trend is bearish. So it's right now it's on the bearish leg. You would have to go into counter trend mode to catch this long, right? Because like I always tell you guys, it's the levels. You have to align with the levels and the broader trend. If you don't want to do that, because counter trend can be the counter trend mode could be aggressive, and I don't encourage that for beginners. But if you don't want to get involved in that, that's okay. You simply wait until this time frame turns bullish again and wait for long signals on this time frame. It'll take a few days, but you know, that's how you work with that tool. All right. Anyway, make sense, you guys? Let me see if there's any questions in the chat. Any questions? So what you're saying is BTC is going to 300 million thousand tomorrow. Yeah, something like that. With Michael Saylor. Put a Michael Saylor face on that. All right. When you can, would you look at NEO? Sure. Okay. So people putting the things. Okay, cool. All right, you guys. So that's Bitcoin. And what I just said about Bitcoin can also be relevant to highly correlated coins, right? Like Ethereum, Litecoin, all that. Not all coins are highly correlated to Bitcoin, but many of them are. So look for that correlation, all right? And whatever Bitcoin does, your altcoin is going to do the same thing. So if you're looking for places to buy altcoins, like remember just a couple of weeks ago, altcoin season. We're in altcoin season, everyone. We're all going to get rich again. I don't know. I haven't looked at too many altcoins, but I have a feeling we're not in altcoin season anymore. All right. So let's move along here. All right. So that's my Bitcoin thing. Guys, if you have questions, just let me know. All right. And I'll get back. I'll answer your question. So let's take a look at, let's go. I'm going to do gold. I'm going to do oil, like all the ones from the title here. So let's take a look at the Nasdaq real quick. Or actually, we can look at the S&P. right? I'll look at the SPY because people can trade that. The futures might be a little more uh, harder for people, right? So let's look at the SPY. This is the S&P 500 ETF, and what's happening here. So this right here, this green candle, we had that Powell movement, which rhymes with bowel movement. We had the Powell movement on Friday, and I know I'm being funny today. And that was a result of his little speech at the Jackson Hole Symposium, right? So now look where we are. The market's sort of not really doing a whole lot today, but over the previous week it was having a little bit of a hard time, right? We had this pulling back situation. It's basically what, a failed high, and look where we are. So this is a tough spot. We have a higher low over here, which is tricky, right? So this thing is still, we can still argue it's still bullish, but it's certainly tired, right? It seems like it's reaching some type of exhaustion. And again, this is a very low volume time of the year. So what happens on these charts now is not really as relevant, right? So you can't really make some judgments on this. I would wait till next month, right, before we could really make any judgments. Now, what we can get from this chart is level. So we got this level right here, and we got this level over here. That's it. That's what this chart can give us. So if we break this support, which is around 632.94, 633, we break that support. Right now we're at 643. That's only $10. It can do it. That it could do that in a day, on a really dramatic day. It can do that, right? Maybe not this week, but you know what I'm saying. Some news, core PCE comes out the wrong way, and it can easily do 5 points in a day, right? So if this support breaks, you're going to be watching this entire zone is still an area where it can find support and maybe consolidate. If it breaks this support and then breaks this one back here, because clearly this was a support as well, right? That's going to be the sign that the party is over and this thing is pulling back, right? Like really pulling back, like we had in April, right? That kind of pullback, right? So that's your overall range on the S&P. This is important. Why? Because if you have stock portfolios, or if you're interested in stocks or whatever, and you're buying stocks, this is a good gauge, and this is not a good place. Now, as I've heard, most stocks, the majority of stocks in the S&P, I think something like 80%. We'll take a look at that, Kai. A long straddle in gold. Okay, we'll definitely take a look at that. What was I going to say? If you have a portfolio in stocks, I just my train of thought. I'm getting back my train of thought. A portfolio of stocks, and like I was saying, from what I understand, 80% of the S&P or something like that is only up 2%, while only 7 stocks are responsible for this ridiculous, nonsensical move. You know the 7 stocks I'm talking about. The Magnificent Seven. I'm so happy. They're so magnificent, right? That's a reflection of just these stocks. So when those stocks, eventually they're going to have a hard time, right? Everything is cyclical. When they have a hard time, that's when you're going to see the pain here. Okay? Just like the tariff drama that we had back in April. You remember how quickly that took place, right? And since then, we've just been whatever. Equally balanced S&P is enlightening to look at. Right. Right, it's very interesting. Most stocks have not benefited. Okay. Suzanne Smith, how are you? I haven't seen you in a long time. Pull back even with possible interest rate in line. Right. So the thing is, okay, Suzanne, that's a good question you bring up here. I'm going to put that question up here. Suzanne, I believe, are you from the UK also? I think you're from the UK. I may be wrong. If you're from the UK, I'm going to start my British accent again. So that's priced in. This is it may be a hard concept to understand, but Powell has given plenty of hints about this, right? In his Jackson Hole thing, the FOMC conference, he's kind of hinted on this. And if you look at the Fed watch tool, it's all priced in. There's a very, very high probability that the rate cut, right? So because of all that, it's priced in. So all this movement that we see here is priced in. That's what it means. It's priced in. So when new information reaches the market, like, when they cut rates at the next meeting, and then during his press conference, he says something that the market doesn't want to hear, or maybe he hints more toward a more aggressive cut, or maybe he cuts more than expected, right? I mean, I think it's a 25-point cut they're expecting. What if he cuts 50 basis points or something? Because, he was making his judgments on poor data points to begin with, right? Because non-farm payrolls is obviously a heavy weight that he uses, right? And non-farm payrolls was dramatically wrong. And the Fed uses this to make their decisions, right? So what if he cuts more than people expect? The market will go vertical because I don't think a 50 basis point or higher is priced in. Okay, so you have to look at it that way. The Powell movement is priced in, right? So the 25-point cut. So the big question is but what if he cuts more? I don't know if that's priced in, right? So that can Suzanne, that could lead to a more of a move. If there's talk of that or hints of that, the market starts pricing that in, right? But the thing is that there are some arguments that also are that don't favor a cut. There are some arguments, right? Like what was it? Inflation. CPI comes in a little hotter than things. We have core PCE this week, right? That's an inflationary number that he looks at. The speech on Friday was to me all bulls could hope for, and yet, well, right. So it's priced in. I mean, he said a lot of generally positive things, right? He was certainly not hawkish, and I saw a clip from that speech, and you have to realize, they have this look and wait, whatever, look and watch, whatever he calls it, right? Wait and see, he calls it. So we have core PCE. That's a big number that he looks at. Okay. Then we have the next non-farm payrolls, the first week of next month, right? That's a big number for him. And now that the BLS should be more accurate, then, it'll give the market a more accurate view and answer the question, or answer the speculation. Is he going to cut more? That's how the market prices us in. So remember, the market prices 6 months in advance. The market prices in the perception of the future, right? So the rate cut and all that stuff, that's all priced in. So it's a matter of, do we get more cut? How aggressive is there going to be a second cut? I believe he said there are going to be 2 cuts this year, and there are only 3 meetings left. So obviously 2 of those meetings he's cutting, unless he changes his mind. And if he changes his mind, because those are priced in, if he changes his mind, the market's not going to like it. Okay, so back to the S&P over here, right? The S&P is vulnerable, and this is important for people who have stocks, right? So not a good place to be buying more stocks, or to be putting on more risk in your portfolio. If anything, it's a place to protect, right? You could buy insurance by buying puts, but you kind of have to know what you're doing with that, because puts are going to cost you money. And if the market never pulls back, that's just money you're throwing away. But hey, that's what you're paying for protection, right? And you have to know how far out they want to buy the puts, how far away from the market they want to buy the puts. So it's not a simple answer, but that's, if you understand options, you can buy puts like on the S&P to protect your portfolio. That's one thing you can do, right? From something like that. So both the number 1 and number 2 Powell movements are yes, UTXO, number 2. Number 2. I believe he likes my jokes, man. At least someone likes my jokes around here. Like, if I was doing stand-up somewhere, he would probably be the only guy watching and laughing. And no one else would be. Everyone else would actually be getting up to go to the bathroom. He'd be the only one sitting there watching and laughing. I appreciate that, though. I appreciate that. I like when you come to the stream. The only guy that laughs at my jokes. So anyway, so that's what I'd say about this. We're in a vulnerable area. People ask me about their 401ks, right? Like, 401k. You're at the mercy of the market. When you have a 401k, unless you're allowed to buy puts in that thing, which usually a lot of times you're not, right? They put you in some funds or whatever, and whatever, right? You're at the mercy of the market. That's the whole thing. So if the market pulls back 30 or 40%, you're just going to watch your money melt away. There's nothing you can do. There's really nothing you can do unless you have some control over that. And it's like you don't really want to sell all your stocks because, generally the S&P works its way higher, but you have to realize that the S&P is working its way higher because of inflation, not because we have healthy economic growth. So yes, we need if we get easy monetary policy, then that's going to be a positive for stocks in general. So it will mute the pullback, right? We'll get a pullback probably, but it'll be muted, right? But if we start getting hawkish or inflation starts getting out of control or something like that, then we're going to see things that the market doesn't want to see, right? So you have to keep an open mind for that stuff. So all I would say is keep your eyes peeled for buying opportunities. If we're in an easy monetary environment, meaning there is quantitative easing and there's all that kind of talk comes out of the next few meetings and stuff like that, then you just pretty much want to look for pullbacks as opportunities. If he starts getting hawkish or something like that, or we get into more of a hawkish environment, more inflation, and he's like, okay, no more rate cuts, that kind of thing, or we see that, or tariffs are having a major effect, blah, blah, blah. We start seeing that, and this thing starts breaking these supports, right? Then hold off, right? Wait for like a significant retracement, right? Use this period back here as sort of a example. Look for something like this. And when you see something like that, that's a time to start buying when it really starts to get extreme, right? 20%, 25%, that's a time to start. And what do you buy? Buy Nasdaq, buy S&P. You don't have to be fancy. You don't have to go out and I have to be a professional stock picker like all the YouTube guys out there, right? No, you don't need to do that. S&P is all you need, okay? Or Nasdaq, that's all you need. All right, I've talked a long time with this one, right? I'm behind here. Any questions? Let me know if you have questions about that. And if you find this helpful or interesting, let me know. If you don't, I won't talk about the S&P anymore. But I think it's important just from an economic perspective, especially for people, who have a portfolio of stocks or have a 401k, and they just want to know like what's likely. And I believe we're vulnerable. I believe a pullback is likely, but the magnitude of the pullback is really going to depend on the data points that we see over the next couple of months. Okay. And it looks like, especially with this administration, there's a big incentive to keep the market positive. The BTC retraced over 100% of the J, while gold and S&P haven't weakness. And while gold and all right, yeah, I'm not sure what you mean there, Kai. Maybe you can explain that. I'm a little confused. But speaking of gold, let's jump to gold. Okay, so we're going to go to XAUUSD, right? This is the gold CFD. Let's see what's going on with gold. So you said you have a straddle, which is basically you're short the two inner options. See, I'd prefer to do strangles on things like this, or just iron condors, which is, it's just a strangle with protection. But all right. So it's the right idea because gold is clearly in a consolidation. What you don't want to see is a breakout, right? So clear-cut consolidation, right? Gold does this. Now, the general trend, let's go to the weekly time frame because the general trend on gold is pretty clearly bullish, right? And if we're going to stay in this easy monetary policy environment, and especially if there's any kind of surprise with the rate cuts or something like that, gold is likely to break out, in my opinion. Like if I knew nothing about gold and you just pulled this chart up in front of me, I would just be like, yeah, long. Oh, price action of the Jackson Hole speech. Look at the daily candle on Friday, right? Compare the price action to S&P and gold. Dollar index and BTC fully retraced. Oh, they gave it back, right? Where the market hasn't. Well, okay, yeah, we can do a comparison there, but yeah, like it's first of all, it's August, right? So there was a reaction there with the Jackson Hole, but it's hard to take seriously when volume is generally lower. And they do this Jackson Hole in the middle of like the worst time to trade in the market, right? Right. So there is these things pushed highs or whatever, and these other markets failed. Right. That is a sign of weakness, but we have no volume behind any of this. Right. That's the component that's missing here. Right. So when volume comes back, that's really where we're going to start to see things. Now, so gold here, right? You have this consolidation. I'd be anticipating the breakout. It's just not there yet, right? You need some kind of easy monetary policy for gold. I believe gold is also going into a cycle, a bullish cycle of the year. There's actually like a seasonality to gold. Never trust a. I think UTXO, you should start writing jokes for me. Never trust a Powell movement when it's coming. I guess we have the same sense of humor. Uh, yeah, I think UTXO. We should do a podcast, and you'll be like the guy that hands me the jokes, all right? And I'll be like the main guy, and you could be like the sidekick guy, and you can write jokes for me. Yeah, never trust a Powell movement. I got to show that. That's funny. Yeah. So anyway, um, so yeah, I mean, you could see that now. Look, gold. It's really just a matter of catalyst with gold. But look, that's a bullish consolidation. It's just sitting here consolidating in this broader bullish situation. You know what you could do, Kai, in a situation like this? You could just look at a simple trend line, right? You could use these trend lines, and I mean, you could see the triangular nature of it, right? And that's typically, it looks like a symmetrical triangle in basically a bullish. I mean, damn, that thing is bullish, right? But if it breaks the lower side, then that can also be very telling. That makes sense. So it's really up to gold, like and the environment, because to me it isn't clear continuation. I can see the retrace more. So when I bought the options, okay, okay, oh, okay, before the J hole, okay, right. So I mean, because gold is tricky that way. Gold is a very emotional market. You do have a cyclical bullish period coming up the next few months, but um, okay. Oh, right, you're long. I get it. When you say straddle, Kai, I'm sorry. I think short because I only short when I short strangles or iron condors, or you short the middle. You're long the middle, so you want to break out one way or the other. Okay, all right, that makes sense. That makes sense, right? But the thing is, when you're long, you need a breakout, right, to cover the cost of the whole thing. How much time you bought on that? I would imagine you bought a lot of time. So yeah, it makes sense. That makes sense. But gold is, I would agree right now, it's still just bullish, and we have bullish support on the horizon, meaning possibly easy monetary policy and all that kind of stuff. I think. Oh, okay, okay. I think you know when we start to see more volume and more clarity from these next few economic events, gold will make its decision, right? But I mean, right now it's biased. It's clearly biased bullish. So, but I could see you got yourself on both sides. That makes sense. That makes sense. I mean, something like this, short-term iron condors, like weekly iron condors, or even a couple of days, might be a nice. And of course, those are going to be risky. Once this thing breaks out, you're going to have a loss on your hands. But the iron condor at least protects you a bit, right? Rather than the naked straddle. So yeah, and you're right in the middle here. So you can't say much about gold until it breaks out. The Trade Scanner Pro is long, right? And we went back to the blue line here, if you notice. So that's actually a long again, right? There were a couple of long signals in here. And the Trade Scanner Pro is projecting a profit objective of, what is this? 35.14, right? Which would be actually, if you get that, that would basically be like the breakout in progress, right? That would be the breakout in progress. So something like that, again, right? If it breaks out of the triangle, right? So yeah, now the iron condors would be like shorter time frame for sure, right? Because you're looking to take advantage of the time, and you don't want the breakout in those situations. You want it to stay inside this range, which I mean, where's gold going to go over the next few days? Unless again, some geopolitical thing, gold can move. That can come out of nowhere. But as far as economic news, I mean, we have core PCE. That's the only thing that could maybe potentially move gold. Maybe, Other than that, you're looking at non-farm payrolls in the next FOMC meeting, right? So speaking of that, real quick, so that's gold. You guys see that? Let me know if you have any questions. I mean, Kai is pretty much the only guy here, pretty much heavy in gold, I guess. Excuse me. Okay. Ricky. Yeah, Ricky from London. He's not really from London, but he has a pub there in the UK. Ricky, let's go to oil. All right, for oil, I'm going to look at CL1. Oil futures. Let's take a look at oil. Here's a position in oil, mate. Oh, that's Australian. No Australian accent here. All right, so this is the daily time frame on oil, right? The oil crude oil futures. Now, like I said, oil's been very tricky, and oil is very sensitive geopolitically, right? Anything can change with oil real fast. So it's hard to use charts to really kind of, it's good to anticipate support and resistance levels, but in my opinion, with oil, you got to be quick with oil. If you have money, take it. Don't look for these gigantic moves because you could be on the wrong side of it, right? So now here's the thing with oil. Oil, we talked about the wave count. We talked about how it canceled out the impulse because the wave 4 and wave 1 overlapped, right? After this pullback here. So you could see it's just jumbling around now. So I would not be optimistic about oil retesting these highs because we're most likely in a consolidation, right? So if you're long oil, I think someone was interested in shorting oil. I remember we had this conversation. If you're long oil, right, I would be eyeing this range high area for profit potential. Now, I mean, should you get long oil now? I mean, it's kind of on its way. I would not buy this thing right now, right? Even as a swing trade. Maybe you could do something with options, but you have a level right here. Here are your levels on oil, right? You have this level, which is 61.94. You could round that to 62, right? And then you have this level right here, which you're at right now. This was an old support, which is likely to act as a new resistance, right? Which is what, 64.71. You can even round that to the 65 area. What's today's high? 65.10, right? So this is actually not a good place to be buying, although there's no sell signal there on this time frame. What are you thinking about doing, Ricky, on this? Okay, cool, John. I got them. I don't know if I'm going to be able to get to all those, but I'll definitely get to some of them because I still got to do. I want to take a look at the dollar real quick, then I'll jump to Ethereum. I'll get to you. Don't worry. Thank you for sharing, though. I will get to some of those. Okay, so cool. Thank you for your patience. Ricky, where are you, Ricky? Are you still here? Or are you drinking tea? So I can make fun of British people. Yeah. So you guys see that with oil? By the way, even if you're not in oil or you don't trade oil, the concepts that I'm showing you here apply to any chart, right? This is just basic technical analysis. I was long $65, close the position. Okay. Oh, nice. Nice. Looking to shorting around this resistance. Okay. All right. So your idea makes sense. Okay. The thing is, you want to wait for confirmation. Now, I don't know if you're using a daily time frame or a smaller time frame, but on this time frame, there's no confirmation yet. You have the level, but what you want to see is a bearish candle, a close below this low, 63.53, or basically 63.50, 63 half. You break that low, that would be a sign that this thing is pulling back off the resistance. Of course, that's $2 lower. So if you want to try to get a better price, it may make sense to take a look at like a smaller time frame, like a 4-hour, for example. Here's the 4-hour. The Trade Scanner Pro tried to short this thing 2 times and failed. Okay, and look at this nice resistance over here too. That was a nice resistance, and it still blew through it. So you got to be careful with that. And now it's in long mode, right? So something like this, if you're using the Trade Scanner Pro, you'd want to wait till this thing turns back to bearish, but you got it. This structure needs to change. So you're at the resistance, but you need to get some confirmation. This right here is very aggressive. If you take this, you short this on the close of this candle. It's just, I would not expect a lot from that. So that's going to depend on how generally daily. Okay, so it's going to depend on how you structure your trade confirmation and how you establish your reward risk. So that's a big part of all this. I'm looking at daily charts. I'm giving you guys actionable levels. But to make money, you have to have a structured way of coming up with your confirmation. That's the whole point of the Trade Scanner Pro. Defining your risk and your sizing, right? You have to have those things in place. I could tell you levels all day long. They don't mean anything unless you have those structures in place. All right. So that's oil, Ricky. If you have any more questions about it, please ask. I'll be happy to oblige. Here, dear. I'm from England. You ever see that English muffins commercial on YouTube with that English guy? That is so funny. I love that commercial. They're like, "Where you come from?" He's like, "I'm coming from the pantry." Here, dear. I love that British guy. So anyway, all right. Um, so let's move on here. Okay, cool. No problem, Ricky. Here, dear. Thank you, Ricky. Let's take a look at. I'm going to jump to dollar index, and then we're going to move to Ethereum. Okay, because John here has been very patient. Thank you, John. John, are you new here? So here's dollar index. So dollar index is important to pay attention to. As you know, it's like a reflection of the bond market. By the way, that reminds me of something. Kai, remember when we talked about those, was it the UK bonds? I think it was the UK bonds that you brought up a week ago. I believe we were looking at the yields, were we not? And I thought we were looking at the bond prices. And then I thought about it afterwards. I'm like, I think we were looking at the yields. If we were looking at the yields, everything I said was wrong. Because if I think we were looking at yields and I was treating them like prices. I don't know, because I was saying that the UK looks like it's in bad shape, but if it was yields, then the UK is actually lowering rates. So actually the UK they're going to easy money and inflation, right? Because I'm like, man, everything that I said was completely wrong. So if someone really wants to pick on me, this guy doesn't know what he's talking about, then just go back and watch that part of the video, and everything I was saying. Okay, everything you should have told me, dude. We're talking about yields, man. I just confused it for the prices because I look at ZN all the time, and ZN are the prices, right? I'm not usually looking at the yields. So anyway, I had a reminder of that when talking about the dollar index. So anyway, all right. So dollar index is like basically a reflection of the bond market, right? So it's important to keep an eye on this because we've been talking about weak dollar. We're gonna no longer be the dollar. We're no longer going to be the. I know, Kai, but I'm a professional. I should know these things, right? I'm not one of these 21-year-olds claiming to have conquered the markets and making millions and trillions of dollars from my 1-minute orb breakout strategy. So the dollar index, they're saying we're no longer going to be reserve currency, blah, blah, blah. We need to pay attention to the dollar index because it's just an important gauge on things. The dollar index looks like it's trying to firm up. I mean, it broke the supports. It got ugly there for a little bit, but it's firming up. Why? Why is it firming up? The dollar index, if we're going into easy money, the dollar should be selling off. Now, this is the dollar index compared to a basket of currencies, right? It's a dollar. Excuse me. Sorry, I don't like coughing into the mic. I mean, again, this is not the dollar by itself, but if everyone else is like cutting their rates and blah, blah, blah more dramatically than we are, then I would imagine the dollar might go up on that. So it's sort of like a global economic thing, but the dollar should be selling off if we're looking at easy money on the horizon, right? So that is strange. That's unusual. You have to keep an eye on it. That's a higher low on the dollar index. We shouldn't be seeing that. That's a bullish sign. We start breaking these resistances, that's a stronger dollar. We shouldn't be seeing that, especially when you have the Powell movement coming out and saying things like, "Oh, we're going to cut this and we're going to do that, and we're going to renovate the Federal Reserve, and I'm going to go to jail as a result." Saying stuff like that, the dollar should be selling off or sitting on its lows. So anything, just keep an eye on that. And of course, when we're talking about the dollar, right? Speaking of the bond market, just keep an eye on this. It's not going anywhere right now. So it's not something you have to watch like every minute. We're still just stuck in this range. But when we start moving, right, break a support or break a resistance, that's going to be telling. And I suspect you're going to see that type of price action in the bond market. These are the prices, not the yields, right? We're going to see that when we get these big economic events. So the next big ones really are the non-farm payrolls for next month and the FOMC. Core PCE may give us a look into that and may shape things, but it's really non-farm payrolls, I believe, is the next big event. Okay, so just keep an eye on that. That's why those economic reports, those economic events are so important, at least to be aware of. All right, let's move along. Now, John, thank you for your patience. Let's take a look at Ethereum. John's like, man, when's this guy going to do the Ethereum, man? Here it is, John, Ethereum. So this is the weekly Ethereum. Now, Ethereum's been out of control, but again, it usually has a correlation to Bitcoin. That correlation can fluctuate, but look at this. We talked about Ethereum here a few times over the weeks. We talked about this 5-wave structure. In fact, remember, guys, we talked about this when this was in wave 4. Remember? We talked about it here on the stream. We're able to count 4 waves. And I said, one more wave is likely. That's typical of 4 waves. Remember that? So we got it, right? We got the 5th wave. That's definitely a 5th wave. That's we can easily count 5 waves in here. So what that tells us now, as you know, is when we have 5 waves in place, the market becomes very vulnerable. It doesn't mean we have a guaranteed pullback, but it means it's vulnerable. And now look, right? We have the Bitcoin pullback taking place, Bitcoin testing its supports, and now look, Ethereum, right? Ugly candle. It's not a bearish engulfing candle on the weekly, but it's an ugly candle. We broke this area right here, which was a pretty heavy duty resistance, right? That's on a weekly time frame. But keep in mind, when you break a resistance, there's usually a zone just above it that looks something like this. It really depends on the magnitude of the move. And this zone is what I refer to as the fake out zone. And sometimes we could blow through it, but when we come back inside like this, that's a warning sign. And if we break below it, basically we come back inside this range and we break these old highs should be a support now. Okay. This old resistance, I'll draw a line there. That should be a support. If we break below that, then that's a confirmation that this party is over. Now, most likely Bitcoin will lead and this thing will follow suit. So use Bitcoin as your guide, but I would not be buying this pullback in Ethereum. If I were you, I would not be buying this. If you're long Ethereum and you have some great profit, this is your sign to take something off the table, right? You know how we always talk about, like I get guys come in here. Who was it? I think it was Ricky who had Coinbase, and he was asking me about that. And at the time we talked about it, it was like vertical or something like that. And I remember I said, hold off, wait for this thing to give you a sign, right? When you see green candles, that's not a sign. I tell people usually when you see just vertical, it doesn't hurt to take something off the table because a red candle can appear out of nowhere. But the red candle is the confirmation, right? Not only that, today is Monday. And I mean, this is how we start the week off. Also, keep an eye on the previous candle low. That's a pretty wide candle, right? 4060. This went as high as 47.97. Was this a new all-time high on this thing? Here's the all-time high back here. Wow, look at that. It made new all-time highs. I'm sure it sucked in a lot of morons. This is going to go to 10,000 next. Michael Saylor said so. He's a Bitcoin. I don't care. It's going to 10,000, right? So that's my retail trader impression. So so that's a new all-time high. Now, again, great if you're long. Great if you had limit orders to sell up there, right? Take money off the table. Not a good place to add risk. So watch this low. That low happens to be the support level now based on these old resistances. And it looks like we tested that at one point and reversed off of it hard, right? So that's an area. That's good for swing trades. That's good for day trades. Yeah, so it faked out up there, but it went there, right? So great if you're, if you took money off the table. If you haven't, you might want to take something off the table. Like I said, I can't give advice, But if I was in, I'm not in Ethereum, but if I was, and especially if I had good prices, I would certainly take something off the table, at least 20, 30%. That's what I would do. Okay. $10 is not actually a real all-time high. Well, I mean, it technically went higher. I mean, it went higher. So if you look at an all-time high, I mean, if we look at it more in a more subjective way, we could say, it's a fake out. It's not really, doesn't really count. But technically, that's the new all-time high. So we could say that it just never followed through, which, fake out. These things happen. So my point is, I would not be looking to buy here. Now, if you're looking at day trades, that's another story. But if you're looking at swing trades and investing, then there's no reason for swing trades yet, not here, right? We want confirmation. I'm guessing a lot of long positions are very red. Well, if they just bought into this now, or if they bought into this recently, like if you bought into this during this wave 5 leg right here, if you got long in here and you're still in it, I would certainly be looking to do something with that to get out, because take something off. Because if this is truly wave 5 and we're looking at a next broad corrective wave, man, you're looking at something like this. Okay, you're looking at something like that. That's the magnitude you're looking at. So that's why I warn you, be very careful with buying here. I don't know what you're thinking, but if you're thinking of maybe buying the pullback or something, which a lot of people naturally would be thinking, understand that you have 5 waves in place. So buying pullbacks now is going to be tricky. And you should, if you're going to do it with very low expectations. The pullbacks that you want to be aggressive with are wave 2 and wave 4, especially wave 4. Wave 4s are that's like the clearest pullback you can buy is wave 4. All right, sure, no problem, Alex. I know I got a couple of these from John. John, I'll look at one. I know you had 4 of them. I'll look at another one. But Ethereum may apply to the other ones since they're all altcoins. Now, John, does that make sense to you so far? Does that make sense what I'm saying? Again, I don't know your plan, but wave 4 is probably the best pullback to buy, right? Or if you're looking at day trades, you're looking at little mini pullbacks, inside of these bullish impulse waves. But now that we have 5 waves complete, that's where you want to be more conservative. Okay, you want to be more conservative. Wait for confirmations, and if you get confirmations, like this is a weekly chart. So we go to a daily chart, and you're like on a bullish, like you get like a bullish pin bar, for example. Let's say you get a bullish pin bar right here in this area, okay, which I believe may have been that weekly low. You get a bullish pin bar here, and you want to buy that. Okay, great, but I would not be overly optimistic about making a new high. Just try to make a 1.5 to 1 reward risk, something like that. Maybe try to let some run, but remember, you have 5 waves in place. So price is now more vulnerable. You need to see a full corrective wave, right? At least 3 legs. We don't even have 1. And Bitcoin, same story. It's basically just following Bitcoin. Does that make sense? So that's what I'll say about Ethereum. Now, I'll jump to one of your other ones. Of all 4 of them, right? We covered Ethereum. What would be other? Like I think you said SUI. And what was the other one you had in there? Let me see. I'm willing to bet it's going to look similar. Dot. How about Dot? Let's take a look at Dot. Polkadot. All right, let's take a look at Dot. Okay, so Dot is similar, just not as relatively strong, right? Ethereum was like super strong. Okay. All right, so I'm just gonna I'll do Dot as your second one, unless you want me to do like SUI or something. But I'm gonna do 2 because I got to do Alex's over here, and I've been over an hour. I got to sign off here. So, but I want to get you. You've been patient, so I want to get to your thing, and Alex too. So I'll do Dot for you. Now, I think Dot is an interesting choice because Dot obviously should be more correlated, and it's not, right? So look at this. Let's go to the weekly. This is relatively weak. So all these people that this is why when I don't know if you watch people on YouTube, especially these Bitcoin people or these altcoin people, they're effing morons, man. I mean, altcoin season, altcoin season. This doesn't look like altcoin season to me. Okay, this one's certainly not participating. Maybe PP coin is, but this one certainly isn't. So you have these resistances here, right? So look at this. In order to even think about being bullish in something like Polkadot, excuse me, this is a weekly time frame. All I see here are lower highs. I don't even see resistance breaks. All I see are lower highs. So you need to break a resistance to even think about being bullish, to even think about it. You don't even have that. So something like this, I don't know if you're in it, but I certainly wouldn't be buying more of this. If maybe you're in some and you're like, oh, I like the project or whatever, I believe in it. Okay. But this is not, there's no strength here. So with this relative weakness, if there's a real sell-off in something like Ethereum, and Ethereum seriously pulls back, this thing is poised to break these supports, right? Which is what? $3? This thing is poised to break that. So like if I was long this, and I know like Ethereum has those 5 legs in, and Ethereum is now in a broader corrective wave, and same with Bitcoin, and I'm long this, I wouldn't be expecting much out of this, just in that regard. Now, if they have some inside information that I don't know about, and some kind of news, and like Michael Saylor is going to put all his money into Polkadot, then that'll change things, of course, right? But on a technical basis, this does not look good. It looks relatively weak. So I would be very cautious with this. This is not one I would be pouring more money into. I'd be more conservative. Like let's say you're in a position and it breaks these supports, that might be a good time to exit some, even for a loss, just to protect your money. All right. All right. So I'll leave you with that one. All right. So I got to move on. I'm sorry about the other two. You know what, John? Come back next week, right, and ask me about the other two. All right, because usually I do one per person, but since it's kind of slow, I can do more, but 4 is kind of a lot. All right, so hopefully you could use this as sort of like a blueprint for the other ones between Ethereum and DOT. All right, so let's move over. What was Alex here? Alex wants Neo. Let's take a look. And let me know if you have any questions, John. Here's Neo. Is this the car guy? Is this the car manufacturer? Let's go to the weekly. I think this is the car. So the electric car, the electric vehicle maker. Let's look back here a bit. So Neo, man, this thing has sucked for a long time. So look at this, right? You have this support here. Interestingly enough, you can count waves very easily. 1, 2, this is clearly 3. So Alex, this is a nice 4th wave on the weekly. Actually, 1, 2, 3. Oh, actually, no, you know what? This could be 4. Does this overlap? No, this doesn't overlap. It doesn't overlap. So this smaller wave could be wave 3 because it's not the smallest wave, right? Wave 3 can't be the smallest wave. That's not the smallest wave. Wave 1 is. So that qualifies as a wave 3. Wave 4, I mean, that's not an overlap. It barely touches. That's not an overlap, which means wave 5 is done. Like this is wave 5. That's definitely wave 5. So we can officially count that. Okay. All right, John, no problem. I'm always on the same time, John, 3 p.m. generally. But I mean, was that useful for you? And I mean, you could, the things that I said about Ethereum, and you could probably apply to SUI and to the other one there if the charts look similar, because a lot of times these things are highly correlated. Okay, so if I talk about a Bitcoin and Ethereum, it's almost like talking about the same thing twice. All right, so with that in mind, Alex, if this is wave 5 and this is how we start out the week like this, and we have 5 waves in play, I would not be buying pullbacks here. If anything, wait for the pullback to the wave 3 high. If anything, if you're looking for a swing trade there, but I would be cautious because of those 5 waves, right? And if these are 5 waves, if this is five waves, that means we're looking for a broader wave 2. So you want to look at the 38% retracement of that entire structure. That would be probably a good place to be buying for a wave 2 completion, right? And if you could get the wave 2s, if you could get a bottom of a wave 2, that means wave 3 is likely to follow. Wave 3s are usually very dramatic waves. Wave 2s are very hard to catch the bottom of, but if you catch a broader wave 3, I mean, that's great for investing if you could do that. So it looks like we have a 1, right? So how far does 2 pull back is the question. I look at the 382, look at the 50, right, on the larger time frame, and those might be some good investing prices, right? Now I don't know what their story is. I don't know, maybe they've been doing better with their cars. I don't know what their story is. But that's the wave count, right? And you want to try to align the wave count with what's happening fundamentally. Because remember, the wave counts are a reflection of sentiment typically, right? And sentiment is often a reflection of fundamentals, right? What's going on internally. There may be information that we don't even know that people are reacting to, like maybe insiders or whatever, that will be reflected in the chart, but we don't know why, right? But the wave counts can at least help you recognize the market in terms of the structure. It's basically like a reflection of the fundamentals. So that's what I'd be watching for on something like this if you're looking to invest. Otherwise, I don't know. I'm not a big fan of shorting stocks like this. These ridiculous stocks. This thing is $6 now. So what's your plan with this? What are you thinking with NEO? Are you thinking shorting this thing? Are you thinking buying a pullback? Because again, for those of you that may be new to my stream, I use wave counts to just kind of give me a general idea. How should I be thinking? Should I be thinking long? Should I be thinking short? Is this thing generally weak? Is this thing generally strong? What side should I be leaning on? That's what the wave count tells me. And for wave counts particularly, I'm looking for wave 4s and wave 5s, particularly those waves. They could be small magnitude wave 4s, wave 5s, but wave 4 to wave 5, which is this right here, is the easiest wave to identify, and it has the highest probability of producing the next wave because impulses typically move in 5 waves. So if you have a wave 4, wave 5 is likely to follow. That's what protects you from shorting too early. Like a lot of people may short something like this. Like let's say this was a Bitcoin chart. And you're like, hey, double tap, I short it. The other side told me to short it. And then you short it. Meanwhile, you just shorted the bottom of wave 4. Right? If you knew that was a wave 4, you wouldn't short it. And we see wave 4s all the time. How do you count your waves? So John, you could Google this. This is just wave counts. There's plenty of information on this on the internet. It's a very old technique of forecasting, but there's 5 wave impulses and then there's 3 wave corrective moves. So you're counting 5 waves, and there's rules for the waves, right? So you start wave 1, usually pick a low or a high, right? A significant low or a significant high. Wave 1 is typically an impulse wave and it has 5 subwaves, right? So that's typically wave 1. These are fractal in nature. So you can have mini impulses within a broader impulse, right? So just Google impulse wave and you'll learn about this. So wave 1 typically looks like that. Wave 2 is typically a corrective wave. And a lot of times it could be a triangle, some type of consolidation, or a 3 wave corrective. It's usually some type of consolidation though. And they letter these waves, A, B, C. But the A wave, for example, can have 5 subwaves in it. So it's an impulse, but it's a corrective impulse. And this can get very confusing. So wave 3s, the rule is it's never the shortest wave. So of these waves at the time, if we only have 3 waves, it can't be the shortest one. So obviously it's larger than wave 1. So that could qualify as a wave 3, especially if we have a wave 4 in place. We can count 4 waves. We could say, okay, of these waves in place at the time, right? Wave 3, in fact, if I just do this replay real quick and I cover this up, at the time it looks like that. That's what 4 waves look like, right? When we have this, you only have 4 waves. At the time, you could say, oh, yeah, this wave 3 is certainly not the shortest wave, and you're expecting one more wave. right? And then that's when you get wave 5. So like I said, you can't don't make the mistake of thinking, oh, I can trade on that. It's very hard to trade on that, but it's good for a general roadmap. Okay, it's good for a general roadmap. I think BTC overlapped. Well, I'm looking at 108 for that. Any thoughts on Intel or AMD? Axel, I'm about to I appreciate you asking. Sure, I'll put the weekly on here. I thought I had the weekly on here. Yeah, we looked at the weekly earlier. But what are you thinking about this, Alex? So, Axel, I start the stream at 3 o'clock, about 3 o'clock every Monday. Come back and ask me then. I'm about to sign off over here. And so I'm not going to look at any more charts. So ask me earlier, and I'll be happy to look at AMD. I think I covered AMD in previous streams, but I know you don't want to go sifting through hours worth of me talking about nonsense half the time. So, but that's when I usually do it. So just come ask earlier. I appreciate that. Next week, 3 o'clock, come in, ask me, and I'll go over those charts with you, okay? But thank you for stopping by, and thank you for asking. So Neo, here's Neo on the weekly. I mean, the 5 waves are pretty clear here too, right? You see that? Okay, yeah. I mean, I started with the weekly. So I don't know what you're thinking about this with Alex. I don't think about buying it or selling it. Okay, no problem. But that's what I would say about something like this. So, and John, you got it. Like how I'm doing the wave counts again. This is not something I've made up or whatever. These are rules. Just Google it. There's tons and tons and tons of information. It gets a little confusing. Just learn impulse waves. That's all you have to learn. Learn the rules of an impulse wave. There's only 3. It's very simple, right? And then use it as a general roadmap. It's usually one of the first things I look at. But if the impulse is confusing and you're like, I don't know what I'm looking at, then don't use it. That's another thing. If I'm looking at wave counts and I'm like, this might be this might be that, wave counts can be very subjective. If that's the case, then I resort to just support and resistance. You got to keep it simple. You got to keep it simple. Okay? But the wave counts are a great roadmap to use for general, what should I be leaning on? Kai says we're overlapping. We're at 110. So no, Kai, I mean, I have the overlap at 108. You know, I'll just go to that real quick and then I'm going to wrap this up. I have the overlap at 108. We're pushing lows. That's interesting. Because you know why, Kai? I'm looking at wave 1 over here, like this area right here. That's where I come up with the 108. That's where I come up with that. I mean, again, it's subjective, but I'm using this area right here as my overlap rule. Right, so we're close, and also I like it needs to close. Remember, if it overlaps and gives us a pin bar, then that's not really going to count. If it gives us a quick pin bar, okay, like if it touches and next thing you know the candle is green and we're back to 112, then that's not going to count as an overlap. It's subjective that way. That's why a lot of people don't like the wave counts, because it can be subjective. But so you just sometimes you have to deal with that. But you want to keep wave counts generally speaking. So UTXO says, before you go, I love UTXO. I'm telling you, man, you should be my stream partner. He's gonna write my jokes for me. All right. Have you looked at any PP coin recently? Little PP. I'm telling you, there's one coming out. Little PP. You'd appreciate that one, UTXO. Anyway, all right, you guys. So you guys following me on that? Any questions? I know I try to keep these streams at an hour, because I got stuff to do. But you guys start asking questions, and I'm happy to answer questions. Like I do like to be social. I do like to talk to people, and all that stuff. It's just these streams I get very little out of them. But because my 5 main guys show up every Monday, that motivates me to come and do the stream, because I certainly don't get paid to do this. Okay, so just letting you know, I get nothing from YouTube, nothing, 0. I might as well be playing with myself right now. That's probably more productive. All right, especially since I don't have a girlfriend. Anyway, all right, enough of that personal stuff. So you guys following me? All right. So guys, All right, no problem, guys. Now I appreciate you guys. So this is the 4th week of August. All right, next month we're going to get. We should start to see some things to get. We should start seeing a little more action, right? And as volume begins to pick up again, right? So things should be getting more interesting. Now is a good time to be paying attention to these levels. Now is a good time to be paying attention to things that people are not paying attention to. Watch the bond market, watch the dollar, and watch these key levels that we've covered here. And watch, the most important thing are the confirmations, right? Watch for the confirmations, because without that, everything I said here is meaningless, right? Okay, you guys. So again, thank you. I really appreciate you watching. Press the like, subscribe if you're new. Every Monday, 3 o'clock, whatever, come and I'll answer your questions. Though you guys who asked more stuff and I wasn't able, I'm sorry. I know I've been here at the time anyway, but you have to understand, if I went over those charts, I'd still be doing this and I'd be here for like another hour, right? So I got to wrap this up. Anyway, so I appreciate, come back next week and I'll be happy to answer your questions, okay? So enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you so much for watching.